this is Daniela Cambone, and welcome back to StansberryInvestor.com. If you've ever wondered or have thought about investing in gold and silver, but don't know the perfect mix to own and in which form, well, this is the episode that you need to watch. We've brought back Mark Yaxley. He is the managing director over at Strategic Wealth Preservation, SWP, but he joins us today inside the vault. He is literally taking us inside the vault there in the Cayman Islands. Mark, welcome back to StansberryInvestor.com.
Well, very glad to be back with you, Daniela, and excited to share with your followers some beautiful gold and silver products from inside our vault here in Cayman.
Absolutely. Like I said, a real special treat for us all, because most of us have never seen what the inside of a real bullion vault looks like. But first, I see those majestic, beautiful, shiny yellow bars behind you, Mark. Approximately how much is that worth right there, that stack?
That is a really nice pile of 400-ounce gold bars. So those are the largest bars that you can purchase in terms of gold. And based on today's prices, I think you're looking at about $200 million.
Wow. Wow, that's pretty sweet right there. Well, I guess that's a perfect intro here for our topic today. You joined us a few weeks ago, and that episode was such a resounding success. I had so many people email me saying we need more educational content. We covered coins and bars then, and today I really want to take a deep dive with you on gold and silver. Why gold and silver? Because Mark, as you know, that's probably one of the top questions we in the precious metals industry usually get. What's the perfect mix? So today you're going to be sharing your insights as to, what is the perfect amount of each you should be owning or looking to own, and in which form. But first, before we get into the nitty gritty, let's talk about the overall, larger picture differences of gold versus silver.
Yeah, sure. I think it's really important for people to understand that when they're considering investing in precious metals, that gold and silver, obviously aside from being two separate commodities, really serve different purposes in the world that we live in. Gold has a fairly few industrial applications, kind of a diminishing list of applications. Most of the gold that's mined is used for investment purposes, whether it be retail investors or backing ETFs or funds or central banks that are accumulating gold, large gold bars like these ones for their own purposes. And the other major application for gold is jewelry, obviously, but gold jewelry is a slowly declining market. Younger generations tend to buy less gold jewelry. They tend to buy electronics instead. And on the other hand, you have silver, which has a wide range of industrial applications, including medicinal applications. It has some antibacterial properties. So you'll find it in some beverages, for example. You'll find it in clothing that has antibacterial properties like Lululemon pants, for example, because you don't want that sweat to start stinking. And then you find it in solar panels and inside of instruments that they use in hospitals as well. So really a vast array of applications there.
I have to tell you, because I know you had told me that thing about the Lululemon pants. I've never looked at them the same way since you told me that there's silver in them. But there are some really key differences that someone should be evaluating when they're thinking about gold and silver, right?
Well, that's right. Because they have these different applications, they don't always behave the same way. If you look at the charts, yes, in general, they do tend to follow each other because they are part of the precious metals family. But there are certainly periods of time where one will outperform the other. For example, gold over the longer term has outperformed silver, obviously, by quite a margin. When you look at the price per ounce, it's significantly higher. Gold versus silver. But when you take shorter periods of time, particularly bull markets or bear markets for precious metals, I often use the example of 2008 to 2011, you'll notice that silver does extremely well in a hot market for precious metals. So from 2008 to 2011, gold was up about 140%, which was great. But silver was up almost 400% during that period of time. It's very volatile, which is both a pro and con of investing in silver. So it's important people know that they do behave differently, and that's why you should consider owning both.
Right. So silver is more volatile. That's definitely something to consider. But another thing we have to bring up is price. Gold is, around today's price is 70 times more valuable than silver on an ounce by ounce basis. So price, premiums, and size. And I believe you have something to show us when it comes to size, to really put that into perspective for us.
Right. I wanted to give you a visual. So just bear with me for a second. I'll take a short walk over here. We pulled out about the equivalent amount of silver and gold for this visual. We've got about $180,000 worth of silver. These are 100-ounce silver bars produced by the Royal Canadian Mint. And sitting here on top, if you can actually see them, are 3-kilo gold bars, which is worth about $180,000. So you have the equivalent amount of silver versus this equivalent amount of gold. And I can tell you, Daniela, as we set up the shot for your viewers, just moving this silver is a workout on its own. And that's something people need to realize when they're considering investing in gold versus silver. One of the factors, aside from the price and premium, which we'll talk about in a minute, is the sheer bulkiness of the metal, because that comes into play when people are considering storing at home, for example. If you're going to invest in silver and or gold, how much space is it going to take in your home? Do you have the appropriate place that is secure in your home? Obviously, you're not just going to want to leave this pile of silver in the closet. So you have to think about things like that. And in terms of shipping this metal, whether you're taking delivery from a dealer or potentially moving it to another home or business or vault somewhere in the world, there's obviously a shipping cost that's pretty significant for the silver versus the gold that you're looking at. And lastly, of course, if you're storing it here in a vault like this one in the Cayman Islands or another vault around the world, the vault operator is going to charge you more for this giant pile of silver versus a small pile of gold. So these are all things that people need to think about just in terms of weight and volume.
Okay, so that's a really good point. You mentioned price, and we often hear, well, I can't afford gold. It's too expensive, and we can get into denominations later. And that is true. Gold is much more expensive than silver, but premiums on silver are higher than gold, correct?
Right, and that's something that comes up all the time. It's probably one of the most frequently asked questions I've gotten over my career is, why is it that silver is so expensive in terms of premium versus gold? And the answer is actually quite simple. There's a lot of kind of conspiracy theories around that, but the truth of the matter is that the fixed costs for the mint or refinery that are producing either a 1-ounce gold coin or a 1-ounce silver coin are almost identical. It costs a few dollars for them to actually take that gold, melt it into a round, then stamp that round, finish that product, and then ship it off into the supply chain. That fixed cost is relatively the same for gold and silver. Now, obviously, they produce a lot more silver coins, so there is some cost savings there. But when you take that fixed cost and divide that into the value of the underlying commodity, so if you take like $2 or $3 and divide it into $1,900 worth of gold versus $28 worth of silver, obviously the premium is going to be much higher in terms of percentage for the silver product than the gold product. And so that's one of the reasons. And then once that product moves into the supply chain, again, you have to factor in things like logistics. There's a company that's going to come pick up that huge pile of silver from the mint every week, 500,000 ounces from the Royal Canadian Mint or more. And then they have to move it to a distributor in Texas, a distributor down in New York City. And those shipping costs have to be factored into the silver premium as well. So those are two of the reasons that silver in terms of premium is higher than gold.
And in terms of the mix, the famous Mark Yaxley mix of how much gold and silver to own, I always say it's like making that perfect martini. How do you find that sweet spot, that balance? How do you know how much you should own of each?
That is a very good question, Daniela. And I don't want to take credit for having the perfect mix. I can provide guidelines. I think it's important for people to realize, kind of going back to what we talked about earlier, that market conditions do change. So your mix can also change depending on the market conditions. But if you boiled it down to simple guidelines, typically when we're talking to clients about diversifying amongst the precious metals, we'll say you're looking probably at a majority of gold. So either 50 or 60% of your portfolio would be in gold, and either 30 or 40% of the portfolio will be in silver. And the remaining percentage, I personally attribute to the platinum group metals, which is the often forgotten metals that, the palladium, rhodium, and platinum are 3 industrial metals that a lot of people don't have in their portfolios that they should have, because again, those metals have their own market conditions, their own industrial applications, and they've done extremely well, especially palladium and rhodium over the last 5 years. I mean, 1 ounce of rhodium, which is literally the size, this is 1 ounce. If this were a rhodium coin, it'd be worth 23,000 US dollars. So maybe not as affordable as some of the other metals, but certainly something to consider if you're really trying to diversify your portfolio.
Right. And you can get physical rhodium coins now, right? I remember back in the day that wasn't a thing, but today you can, right?
It is a thing these days. You can buy physical
Right.
rhodium, I believe, in both bars and coins. Premiums
Yeah.
tend to be a little bit high because it's a very difficult metal to work with. And they only produce, a few hundred or a few thousand bars of coins at a time. It's a fairly small market, but they are available.
Okay, so let's talk forms now. And I don't know if you can show us some denominations of just what's popular in gold and silver.
Sure. Yeah, I'll start with gold here, and I'll do my best with the camera that we have available to us today. But really, when you start the conversation, when you're talking about investing in gold, really the conversation usually starts with 1 ounce products. This is a 1 ounce. This is actually a 1 ounce gold Krugerrand that I pulled out today. One of the older coins, one of the best known coins from back in the day. But it is 1 ounce of. It contains 1 ounce of pure gold. And what's important also for people to realize is that when they see the price of gold on the news or on a website or on an app on their phone, this is the amount of gold that they're actually quoting the price for. So that's a 1 ounce denomination. And as you move up in terms of scale, you have larger denominations. Like here, I've got a 10 ounce gold bar. This is a Credit Suisse gold bar. And basically, it's very simple math. This bar contains 10 times the amount of gold as this coin. And as you ramp up in terms of denomination, you will save yourself some premium over the spot price as you ramp up. And the next stop in terms of gold typically are kilo bars. So if I just stack this, maybe that'll be kind of the most effective way to do it. You've got the 1 ounce gold coin on top. You've got the 10 ounce gold bar in the middle, sandwiched in the middle of the kilo gold bar. The kilo gold bar contains 32 ounces of gold and is a very cost-effective means of owning gold. You really start to drive your premium per ounce down. And as my mentor used to say, you get more gold for your money when you start ramping up in terms of denomination. So the point here is that there are a number of denominations available for investors. And depending on their circumstances, depending on their budget to invest and or their exit strategy later in the life cycle of the investment, like how much do I want to sell at a time, for example, these are things you need to talk to your precious metal dealer about and really decide what product is best for you.
Just one thing that comes to mind when you're showing me the gold products, Mark, is that, some of them are so small. So people might say, well, why wouldn't I just keep that in my house?
Mm-hmm. Which is completely valid. I think I'm a big proponent of having some precious metals at home or very close to home. Maybe it's a safe deposit box at your local community bank. But the caveat there is that you don't want to have too much. This pile of silver, for example, for most people's homes, probably too much. Not to mention the insurance component. You need to have adequate insurance in place, and most home insurance plans are not going to cover a big pile of silver unless you have a really great vault and a great insurance broker to put that together for you. So in terms of gold, I think, it's very easy and inconspicuous to have 5 or 10 ounces of gold at home.
Right.
But beyond that, you have to think about things like security and insurance and risk. And that's why people tend to end up in vaults for larger holdings.
Very, very, very cool, Mark. And I guess just before we wrap here, you have another special treat for us because you're going to share with us your top 5 favorite coins. Is that it?
I'm going to share with you 5 of my favorite gold and silver products. And awesome. I will run through them and tell you why I like these particular products.
All right, let's go over that.
Well, I've got a few bars and a few coins because I think there are arguments for owning both. These are, again, market conditions change, circumstances change. You need to have the conversations with your dealers as to what's best for you. But these are 5 of my favorite products. So coming in at number 5, we've got the 1 ounce silver American Eagle coin, which is obviously very popular in the North American market. The US Mint has a great reputation, especially inside the United States. Those coins have an excellent buyback. They have the best buyback of any precious metal product. So when it comes time to liquidate, you're always going to find a buyer and they're always going to pay you a nice price above the spot price for them. But the downside and why they're probably only at number 5 is that the premium when you buy them is quite high for silver eagles, especially right now. So you have to be mindful of that when you're.
So easy to liquidate, but high premium.
Exactly. So you've got a lot of pros, but you also have one con to consider with the silver eagles. And I think that's why this next product is kind of a nice offset to that. If you don't like paying high premiums for silver, but you still want brand recognition and great liquidity, we've got the 100-ounce Royal Canadian Mint silver bar. So Royal Canadian Mint is basically the U.S. Mint's largest competitor in the North American market. Their premiums tend to be lower than the U.S. Mint, and especially when you get into bars and especially when you get into larger format bars. So this 100-ounce silver bar, it weighs about 7 pounds. So if you see me shake it, it's just because it's a little bit heavier than it looks, but it's 7 pounds of pure silver. It's equivalent to 100 of those silver coins that you just saw. And there's significant savings here. So if you can get yourself up to 100 ounces, this might be a good buy for you.
She's a beauty. Yeah. Nice one.
Good looking product as well. Continuing on with silver, and we'll get to gold in a second. Sticking with the Royal Canadian Mint, I know I might be a little bit biased as a Canadian, but professionally speaking, I do recommend Royal Canadian Mint products quite often to my clients, and these Royal Canadian Maple Leafs, because they have all of the benefits of the U.S. Eagle. They've got global recognition, liquidity, and yet the premium is lower. That cost to purchase it is lower. So if you're looking at one versus the other, unless you have a specific reason to go buy that silver eagle, I would tend to recommend the silver maple leaf to my clients. Again, getting more silver for your dollar, which at the end of the day is really what we're trying to accomplish. So number 3, silver maple leaf.
Okay.
Getting into the gold, and the story here is why the next 2 products are high on my list, especially when I'm speaking to investors, not necessarily from a personal standpoint, but from a professional standpoint, is that you can save quite a bit of money by buying gold versus silver. We talked earlier about the gold premium versus the silver premium, and you're going to pay less in terms of percentage over the spot price for gold versus silver. So again, if you're allocating money towards precious metals, I do think you should look at gold. And one of the best examples of how you can save money is buying kilo gold bars. If you can afford this format, which today is in the range of about $60,000 US, if you can afford that, it's highly recommended. It's very liquid. They're traded all over the world. This one happens to be produced in Switzerland. And your premium will really be driven down. There's no downside to this product. I call it the perfect gold bar. That is, it also feels good. It feels really nice to have it.
Right? I don't know how you just resist the temptation to not pat it all day.
Maybe after, once the cameras are turned off. And then lastly, we did our top 10 countdown about a year ago in our own series called Inside the Vault. And this product remains my number 1 recommendation, is the 1 ounce gold maple leaf coin by the Royal Canadian Mint. Again, it's kind of best in class in every category. It checks all of the boxes. It's also cost effective for the investors. And you really can't go wrong with investing. The buyback on this is also very good. So your total spread is quite tight on the 1 ounce gold maple leaf coin. So a very good option for people looking for 1 ounce denomination.
Fascinating. Wow. Okay. Interesting list, Mark. Really, really, really good insights and stuff there. Any other tips you can share with us?
Yeah, I had 2 other tips. Maybe things that, people don't think about all the time, but they need to be aware when they're buying precious metals. And especially if you're trying to save a buck, or you're thinking about what's going to be the best return, right? Because that's really what this whole game is about, is like, what is my lowest overall cost and my best return over a long period of time. So my first tip here is, unless you are a professional scrap gold buyer who makes a living doing this, be mindful if someone is offering to sell you scrap gold, whether it be kind of like a local pawn shop or a local dealer, or even, neighbors or friends. It seems like a good deal to be able to buy gold at like spot or just below. But when you go to sell that, it's not a liquid investment product. It basically has to be melted down by a refiner, and you can expect to take quite a hit on what you're going to receive when it comes time to sell that scrap gold. So just be very mindful, if you're not, a professional, to be buying scrap gold as a means of investing in gold. And the second thing, it's kind of true, but on the other end of the spectrum, is graded and collectible coins. It can be a fantastic way to invest money if you know what you're doing. Unfortunately, a lot of people don't know what they're doing when it comes to graded coins and collectible coins. they don't have the education and kind of the historical aspect of it. They tend to follow the recommendations of dealers, which I've seen in my career, unfortunately, will push graded and collectible coins that might not be the best fit for some people. And when it comes time to sell those graded and collectible coins, which they paid a very high premium for upfront, they might be disappointed in what they get back at that point in time. So those are, just two things you need to be mindful of if you're looking at alternatives to investment grade bullion.
No, just a wealth of information, Mark. Thank you so much. And I just want to say this was a real special treat because no one has access to this vault. It's an extremely secure facility. So it's wonderful to see what it looks like. I was picturing vaults looking a lot gloomier and dark. This one's like bright and cheery.
Well, we're in the Cayman Islands, right, Dee? So we try to keep our spirits up. We get a lot of sunshine, a lot of vitamin D, and I guess that carries over into the workplace.
Awesome. We'll have more educational content from you, Mark. I think this is helping a lot of people. I really appreciate it. Mark Yaxley from Strategic Wealth Preservation coming to us literally inside the vault. Thanks again, Mark.
Always a pleasure.
In the meantime, thank you for watching, and remember to share us where you watch us. That's it for me today. I'm Daniela Cambone.